I'd say to anybody who starts a business, just put runs on the board. Don't matter if you lose money on the first trade, just put money on. You must make money on the investment, but if you lose money on the fees, just get runs on the board. This is a generational opportunity, potentially.
How does one know that?
I've existed in a number of downturns. I've seen lots happen. And for me, this just sticks out like a sore thumb. And he said, look, you're not without talent, and you're not Quasimodo, but if I'm allowed to say that, but you probably ought to do something else. Anyway, through various sort of false starts in careers, I ended up in real estate in 1990 working for a guy called John Sims, and this has been my career for the last 34 years now.
Quick one from me. If you haven't already subscribed or followed this show on the podcast or app where you listen or watch, please do. It takes 10 seconds and helps tremendously. I've got really big plans for the People Property Place podcast, and that one small action really, really helps grow the show and the presence and enables us to keep doing what we're doing. So if you haven't already, please follow or like on the platform you watch or listen to. Thanks so much. Welcome to the People Property Place podcast. Today we are joined by an absolute industry legend, Mr. Richard Croft. Richard is an avid real estate entrepreneur with an insatiable appetite for starting or backing numerous industry-known businesses, from Halverton, M7, Mirastar, React News, and Coyote, to name a few. He sold his last venture, M7 Real Estate, to Oxford Properties in 2021. And at the time, M7 employed over 220 people across 13 countries, with over 569 assets and 4.3 billion euros worth of real estate under management. The question I'm sure you're all asking is why? Why now? Why go again? And why the hell is he setting up Martley Capital? Richard, welcome to the podcast.
Thank you very much.
Not at all. Well, look, I'm genuinely really intrigued and excited to see where our conversation takes us over the next hour or so. But before we get on to Martley and answer some of those questions that I just alluded to, a question that I always like to start these conversations is why and how did you get into real estate?
Well, I think it's quite well documented how I got into real estate, which is entirely by accident. I didn't mean to. I had no desire to be in real estate at all. I wanted to be an actor. I was going to be an actor, at least so I thought, until my father, the writer David Croft, who wrote Dad's Army and I Being Served and Allo Allo, amongst others, intervened and suggested that maybe it wasn't the career for me. I was the lead in a school play. I thought I was very good. He came to see me after school play and said, son, that was fine. Are you absolutely sure you want to be an actor? And I said, yeah, absolutely, I want to be an actor. He said, okay. He said, well, let me just explain to you the concept of being an actor. There are 36,000 members of Equity, which you had to be a member of Equity in those days to be an actor. 2,000 work regularly. And to make it in this business, you need to be one of two things, either supremely talented or supremely beautiful. And you are neither. I laughed, knowing it to be true. And he said, look, you're not without talent, and you're not Quasimodo, but if I'm allowed to say that, but you probably ought to do something else. Anyway, through various sort of false starts in careers, I ended up in real estate in 1990 working for a guy called John Sims, and this has been my career for the last 34 years now.
And did you have any family connections to real estate or property?
Well, so John Sims was married to my sister. So that's how I got involved in my sister Jane. And they were recently together, and that's how I got involved in real estate. So I was a futures broker between 1987 and 1990, and I inadvertently got involved in the property futures contract. Thought real estate was a bit of a joke of a business, I've got to be honest.
Because?
I'm going to choose my words carefully here. At that particular point, it didn't have the sophistication that it does now. It was sort of a business that sort of just, we hadn't invented the Americans hadn't arrived. IRRs were not a thing. There was no modeling. Everything seemed to be done by guesswork. And I'd been involved trying to set up a property future. Well, I was a very junior member of the team, trying to set up a property futures contract against a physical market that didn't actually exist really, and was, there was no data for it. It was all just a bit haphazard. Anyway, I was talking to John at a dinner party about how shit I thought real estate was and what a stupid industry. And he said, well, when you come and work in it? And I had nothing else to do. So I did. I worked for him 15 years, built his international business. And then, the rest is history, as they say.
So what was that first role that you undertook?
T-boy. And I was fucking great at it.
And outside of being a T-boy, day to day?
So my first proper job in real estate, other than making the tea, I was a thing called a roadrunner, which is where Coyote came from. So John had this idea that we should probably log. So IO, the company that I worked for, Industrial Ownership, was an industrially focused business, and he wanted to set up a database of all the industrial estates in the country. So the first 2 or 3 years of my career, I literally Monday to Friday drove all over the UK. From Rhondda and Taff in Wales to Irvine in Scotland, through to, towns outside Norwich that even I struggle to remember the name of. I literally covered the entire UK, logging every industrial estate. And we had a database, in inverted commas, IO, called the Roadrunner. The database was me, to all intents and purposes, and a whole load of files behind my desk. But it was that was the origin of Coyote, the software business. And Coyote was named after Wile E. Coyote, the thing that chased the Roadrunner. So partly in homage to John, because it was a great idea, and partly because we thought it was quite funny.
And how did your kind of role evolve, and how did you kind of forge your kind of career at that early stage?
Well, at that particular point, I'd sort of joined to make tea and learn a bit about real estate and drive around the country and get knowledge of real estate, which I did. And then at some point in sort of the early 90s, 92, 93, IO had a joint venture with CIN called Senio, and I sort of became the acquisitions analyst. And then from there, I think about 1995, I became head of acquisitions, and then sort of my career just evolved. But there was no plan particularly. I just I got interested in certain things, and dare I say it, I wasn't bad at certain things. And so my career progressed and evolved, but not with a plan.
You decided to set up Halverton, or you left, I should say, IO in 2004.
Yeah, in a fit of pique. The word flounce is not a bad word to describe what happened. John and I had a major disagreement in 2004. So by then I was the number 2 in the organization and built the international business. We'd listed. He wanted to sell it. I didn't. I felt we had a really strategic position. We were the first platform to have a pan-European asset management capability. He wanted to sell it to Teesland, Kevin McCabe and Nicola Wilson's business, who are both great people, but I thought it was a mistake. We had a disagreement about it, and I just picked up my toys and left. I'm sort of a bit spoiled, but I just thought it was a mistake. And so I took my team, or some of my team, with me. A guy called Jack Toms, obviously very notably, and several others. And then with Bill Sexton, who came out of Citigroup, a guy called Taco de Groot, Doug Gardner, who'd been the former chief executive of Brixton, and a guy called Andrew Yates, who's recently died, unfortunately. He's a wonderful man, who was the CFO at IO. We set up Halverton to basically do what IO was already doing, but it's sort of direct competition. I felt that a European platform in 2005, 6, 7 was going to be hugely valuable. And we sold that in turn to GPT in 2007. So I think we weren't wrong.
How did you go about setting up Halverton?
2005 is a strange era because, for those people who lived through it, basically, if you had some chutzpah and an idea, you could literally turn up to people and say, I've got a plan. And people would say, is it a good one? And you'd go, yeah, I think it is. And they would give you money. It was probably the easiest era ever to raise money, 2005, 6, 7. And obviously 90% of it was coming from the banks, And so the opportunity to make money in 5, 6, and 7 was huge. Obviously what happened in 7, 8, 9 was the corollary of that. And the opportunity to lose money was even greater. But I don't know how. If you ask me to tell you exactly how we set it up, I don't know. Bill and I and Taco, who are the sort of senior executives of Halverton, we thought this was a good time to be investing in industrial real estate across Europe. We thought it was a good time to have a European platform, and mostly out of ignorance, we just did it. Sometimes it's easier not to know things. So, we learned an awful lot about life. setting up Halverton. It was a huge success for 3 years and then absolute disaster for 18 months before it was bought by Internos. And I probably learned much more in that 18 months of failure than I did from the previous 18 years of my career, which had been mostly successful.
And what were some of those kind of core things that you learned at that time?
I think there were three big takeaways from the global financial crisis for me personally. Number one was debt. Debt is like this tremendous tool. You can think of it as a chainsaw. You can cut down trees, you can make big gains, but you lose control of it. You can literally lose your head. And, we're seeing that again for the first time since 2009. Debt is now becoming an issue. I mean, whether NPLs come back in the same way, I don't know, but, management of debt is key. 2, data management. People underestimate how important data is, A, for asset management, but B, just to make good decisions. So data control, and that's why Coyote became a business. And then number 3, transparency. Transparency is, crucial when, particularly in a down market. So being honest with your investors about losses they face, but also what you're going to do to mitigate them. I don't think there's a single investor in the world who doesn't expect that occasionally equity investment to be without risk. But if you're not truthful with them and also you don't do your best to mitigate the risk, I think that can be problematic. So, the big takeaway that I learned from 2009 outside of data and debt is be transparent, front up to it, and always trying to deal with issues. And actually one of the things about Martley, which we'll come on to, is, I've taken some of the slightly more problematic things from M7. M7 has an extraordinary track record and will continue to have one under the leadership of David Eberl, but we do have a couple of investments which are, I'm going to use the word expression, compromised. I've taken those into Martley as it happens. I don't want to walk away from anything. If I've put people's money into something, I have an obligation, not just a financial one, a moral obligation to make it the outcome as good as I can. And obviously, we have an investment in a building in the West Midlands called the Mailbox, which is certainly tricky. But I think there is a pathway to redemption. I hope when this goes out, I haven't blown up already, but I think there's a pathway to redemption. And, I'm working with all the investors and to try and mitigate any loss or hopefully at some point recover, because a lot of value are cyclical. Values are cyclical. There are valuation cycles. Right now, because of interest rates being relatively high and because certain asset classes, offices being out of fashion, that becomes a perfect storm and a building like the Mailbox is compromised. But it doesn't have to remain so because I think the building has a long-term future. So it's a question of holding on and being able to demonstrate to investors that you have a plan and also, being able to sort out the situation with the bank. Because, the biggest issue with the Mailbox actually is, a classic case in point. Here's 2 of the 3 lessons. 1, the biggest issue is gearing because we were over-levered now. And 2, transparency with our investors because it's compromised because of the gearing. So it's a practical example of lessons learned. I wonder whether I'll succeed in having learned the lessons and actually putting them into action.
I'm sure you will. Your experience and your experience with M7 and setting up the business is well documented. Mm-hmm. I'm keen to spend a bit of time on Martley in the focus of our conversation there. But what can you say about that experience in terms of setting up, building, exiting a kind of leading pan-Euro investment management business?
That was the 3rd time I'd done it. So I'd set up the international business of YO Group, which is now Cromwell, through all the iterations. I set up Halverton, which is now Principal Investors, because that became Internos, and I set up M7. So M7 ended better than the other 2. But what I learned, people have asked me this a lot. I don't really know. And, it's going to sound incredibly arrogant, so I apologize. It's innate in me to build things. I have much more fun building things than managing them. It's one of the reasons that I've created Martley. Again, David Eberl, my partner, who is now the chief executive of M7, I think is a better manager of businesses than I will ever be. I have more fun creating and building, and then when they're existing and big, I need to be surrounded by grown-ups, really. I like building things. I don't know what to say other than that. I enjoy it. I enjoy creating things that don't exist. And, and I think, I suppose one of the things that I would say to people is don't be afraid of failure, because it's not a disaster. If you don't try, you won't know. And, my career is so full of failure. It's comical. But we just, I just don't talk about it. I just talk about the successes. And, if you just talk about the successes, then people think you're successful. I mean, I'm not going to talk about all my failures, but they're legion.
You touched on the IPSX there.
Well, I didn't actually. In the preamble, we touched on IPSX. Yeah, shit show. And that definitely right up there amongst my biggest failures.
Can you elaborate on any other failures that you've had and some of the lessons that you've drawn from them?
Yeah, I mean, I think the lesson is, you've got to try. I mean, that's the big lesson. If you're terrified of failure, you'll never do anything. So Alexander Fleming, he invented penicillin. We didn't invent penicillin. Penicillin existed. He discovered penicillin. But his career is just full of disasters, just terrible experiments. And then he discovered penicillin. That's the only thing he's remembered for. I mean, save the world, really. It's if you don't try and discover things or try and build things, you will never know whether you could. And the amount of conversations I've had in my career with people that want to be entrepreneurs, want to build things.
Entrepreneurs.
I'm not going to use that phrase, but they're afraid to leave their job. They're afraid to employ people to take risk. And the thing about entrepreneurs, and whether I'm an entrepreneur or not, I don't know, because but entrepreneurship is a mindset. Are you prepared to take a risk? Are you prepared to fail? And if you're prepared to fail, then you can be an entrepreneur. I mean, look, I don't want to fail. Can I be very clear about that? I find success and everything that goes with it lovely. And failure is really distressing at times. But if you're prepared to fail, then you have a chance of building something. I think if you're not prepared to fail, you have no chance. And, my preparation to fail is probably born through ignorance or arrogance. I'm not sure. It's like every time I start something, I kind of believe it's going to work. In fact, I totally believe it's going to work.
Has that always been the case ever since you were young?
Yeah. Mad, huh? With no particular, evidence to back up that whatever I was trying would succeed. There's actually nothing really in my life to suggest that every time I start something it will succeed, because 50% of the time, certainly a good chunk of the time it hasn't. But yeah, every time I start something, I think, this time I've nailed it.
Talk to me about Martley Capital and why you wanted to go again for the fourth time. Well, that's huge roaring success in terms of exiting M7, passed it off. It's under good stewardship, great leadership, and it's got a great platform to go and do bigger and better things. Did you not want to just take a bit of time off?
Yeah. And my original plan, I'd agreed with Oxford that I would stay to integrate the business, and I was handing over to David. David was already the CEO when Oxford bought the business. I'd already become chairman. And I sort of, the plan was to stay for 3 or 4 years, integrate the business, become a non-executive, probably stay at M7. And, in reference to my dad, there was a character in I Being Served called Young Mr. Grace, who owned the department store. I was going to be a bit like him. I mean, not totally like him, but I'd wander around saying things like, you've all done very well, and sort of just generally drift into retirement, number of portfolio roles. And but I'm 54. I'm a relatively young 54, I think. And suddenly the world changed. I mean, the reason that I was going to do that is the market wasn't very exciting. It was sort of plateauing. And then obviously the pandemic hit. And then we've had all the black swan events, Sino-US relations, all the breakdown thereof. The Ukraine war and rise in interest rates, collapse in certain sectors. And suddenly opportunity abounded. And I thought, well, I've done this before, but actually I've now got a track record and a backing that I've never had before. So I certainly didn't have at M7, where I struggled to find any backs at all at the beginning. And, I have, I think, a following. And so this seemed like a fun time to start up a new business and, do it all over again. But this will definitely be the last time. I'm going to say that for sure. I will be 60 something by the time this is over. And, I've got books to write probably.
I'm not sure I believe you somehow.
No. I've got loads of things to do. It just won't be real estate. I mean, I'm a frustrated writer, so I'm a frustrated actor. So much that I want to do And, my dad's my hero. He was an amazing guy. And I'd like to emulate that a little bit, fail at that as well, but at least it'd be fun. Or maybe start a career as a stand-up comic or something.
So you touched on a few things there, just in terms of the opportunity set being too great for you to pass it up.
Right now, it seems like a load of fun, potentially. I mean, we've got loads of headaches with assets that we've got, but in terms of new stuff, this is the best market we've had for 15 years at least. And maybe this is a once-in-a-generation opportunity in certain sectors. And so some things that we're doing, which I'm not going to talk about right now because you have to read about it but this is a generational opportunity, potentially.
And how does one know that? I know real estate is a cyclical game.
No, 54 years old, 34 years of experience. I'm existed in a number of downturns. I've seen lots happen. And for me, this just sticks out like a sore thumb. So how do I know? I mean, I just do, or I don't. But I think I do. So, I think this is a literally generational opportunity, particularly for one of the things that we are trying to do, which if I can pull off, I think will be our biggest, will be the most interesting thing I ever do in my career.
So Martley, you set up the business with 40 staff, 720 million under management. Can you just talk to me about...
Well, so basically I've agreed to take from M7 the bits of the business it doesn't want, so the credit business. So M7 is going to focus primarily on being a warehouse manager. That's what Oxford bought it to be its industrial and warehouse brand or manager. But there's a whole load of little businesses that I set up, a small balance UK business, a credit business, and also I've taken back the Central European business. So the bits of, sort of the outlying bits of M7 that sort of they didn't want, or, didn't need, maybe put it that way.
The non-core parts of it.
The non-core parts. And I thought, well, cobble those together. That gives me a platform, and then I can go off and do all the things that excite me.
And so talk to me about the new strategies and the new ideas that you're going to be bolting on to the existing platform.
So credit business is going to be a big part of what we're doing. So it's the first deal we did. We lent to Tristan. We syndicated a loan of 32 million. So not huge. We've just closed our first close on a fund called Rezo, which is Real Estate Special Opportunities. This is my sort of like, this is my fantasy fund. So we're raising £20 million. I can do whatever I like, within reason. It does have an IC, but it's geared towards all the little tiny opportunities that exist in the market, sort of the nooks and cranny, from equities to a bit of bridge finance to buying small assets that are in larger funds and they just don't fit and they just want them gone very quickly. So it's all cash, hyper liquidity trading. So, even assets. We bought one asset from a large private equity group just before Christmas, not in this fund, but on our balance sheet for 800 grand. We sold it for 1.5 million within 6 weeks because they needed it gone because it had caused a political issue for them. And they just needed it gone, and we had the money, so we just turned up and bought it. That kind of fund. But so we're just buying a stake in a public company at the moment, which would be a bit of a laugh. But there's just opportunity to make a lot of money through hyper trading. I'm going to call it hyper liquidity trading, just turning up and having the cash, but we're going to rotate this money very, very fast. So we just had the first close for that. We will be attempting to launch a co-working platform, but with a bit of a difference in that we're going to own the assets. So instead of going everybody else's route of taking long leases and leasing short, which is a mismatch, or management contracts, our plan is to buy the buildings because you've got this strange world at the moment where the investment market for regional offices particularly, but for offices, if you ask an investor, would you like an office or would you like a test tube with a syphilitic culture in? Half investors are taking the test tube with syphilitic culture. I mean, just like, fuck it, we don't want offices, we will have this. I think that's wrong. Everybody who tells me that the office has ended tells me from an office. But the way we use offices is changing. So co-working is definitely going to be a major part of the future. But in the regions, there is no co-working offer, really. So the plan is to buy a lot of buildings and create a platform. So we've got plans for that. I've set up an opportunity fund. Again, we're just in the process of raising money. But so we split our business into four bits. Credit, which we've done a first deal, we've raised some money for, and so we're making some more loans. 2 is co-working and that owns platforms. Owns the buildings. 3 is an opportunistic fund, and then 4 we have the Central European business, and we will be expanding into Europe over the course of the next couple of years. Martley Capital will look a lot like M7 in its structure, except for we won't be doing much industrial, if any. So one of the things that I've agreed to at M7 is that that's going to be, I'm still a consultant at M7, and I'm not allowed to park tax on that, nor would I want to, by the way. My interest at the moment is in other sectors.
Yeah, makes complete sense.
And by the way, I cannot speak highly enough of either M7 or Oxford, and they've been a delight to deal with, so I would never do anything that would compromise that relationship.
I was just going to touch on in terms of the learnings of the 3 businesses you set up prior to take into Martley. So it doesn't surprise me that you're saying that Martley will have resemblance or learnings from your time at
from
M7.
all 3, because they're all variations on the theme, which was pan-European asset management-led operating partner stroke fund manager. Martley will be exactly the same. I'd like to think that every time I get involved, I'm doing it slightly differently and slightly better, but I've kept some of the core team around me. So, some of the partners from M7 have come with me. So Jack Toms and Andrew Jenkins specifically, and Tony Edgley, who was our chairman. And Jack has been with me literally since we've been together professionally, I might add. Not romantically, but we've been together professionally for 30 years. And so, he's come with me. He's I think we're symbiotically attached. And every time we've learned, we would do things differently. And so Martley is starting a little bit differently. We've invested a lot of money in our investor platform. What I mean by that is our reporting. And every time I start, I want to improve the things we did previously. I hope we do improve. Just in my mind, we have. I let other people decide whether we have. But, you learn lessons and you try and do things a bit better every time you start. No guarantee that you will, but you try.
That's the idea. You touched on there, Jack's been with you in a professional capacity for 30 odd years. You've also had a very long-standing, loyal team over the years. What are the lessons that you've learned or you can impart when it comes to management and leadership?
I said leadership is easy if you're surrounded by really talented people. So it's not really leadership then. Just let them get in I suppose my role sometimes is a bit like sheepdog. Probably that's not even fair either, but cat herder.
Conductor.
Maybe, yeah. But with really talented people and first violin and wind instruments. But it's I don't know. There are not many lessons I can pass on leadership. Just, friendship though and companionship, people underestimate how important that is, I think, in building a really good team culture. People say never work with friends. Well, I would only work with friends. Why would you want to go to work with somebody you don't like? Honestly, you spend so much time at work. You've got to surround yourself with people that are funny and engaging and your friends. And the nice thing about real estate, and the reason that I've stayed in it, is as an industry, it's full of really top people. There are very few people in real estate that I don't like. Very, very, very few. And there are hundreds that I genuinely enjoy the company of, and I've been very lucky to have a huge amount of friends in the industry, and I would like to think I still do. So,
it's one thing saying family and friends and building a business, but business is business as well. There must be challenging times as well.
Yeah,
navigating that. Yeah. How have you?
So there have been a couple of people that have left partnerships that I've led, who are friends of mine who I liked, but just for But, you just treat them very fairly and financially fairly. So, those, in fact, probably prioritize their payments. So if things go wrong with friends, you don't give up on them. You just, you navigate it. But that's like saying, what happens if you fall out with one of your friends? It's like, well, you deal with it and you try and mitigate it. But I would much rather work with friends. Business is business. Who said that? It's a bullshit statement. It's like, how much better to do things with people that you like, and for me, business, friendship, partnership, teamwork, they're all connected. And anybody who tries to separate them is fine, but that's not the way that I would do things.
Talk to me about being a contrarian investor and having a kind of a contrarian mindset.
Well, no, I don't think it's a contrarian value. I don't like that phrase because that sounds like you disagree with everybody. I would like to describe a value investor for looking at markets and saying, okay, there is a value here because the market has mispriced this. Now, people call it contrarian. I mean, I'm not sure that's the right word. I'd like to use the word value. So I look at certain markets, as I did in industrial in 2009, and think, that looks mispriced. I don't think that the market has fairly valued this sector. And I look at that at the moment with offices, and I can hear people laughing into their headphones. The 7 people that might listen to this podcast are laughing now, going, what a fuck nut. Does he know that the office is dead? I just don't think it is. I think there is a huge potential for the sector, providing that the owners of the sector provide the right product for the occupier market that now exists, hence my co-working discussion.
So in terms of moving forward, you've got the strategies in place, you've got the existing book, you've got aspirations to build another pan-European platform. What are the challenges, or what are the things you kind of need to unlock to kind of take the journey and
making
move
sure
it
that,
forward?
Particularly when you employ a ton of people to start a business without as much business. So, I mean, Martley is loss-making from day one. So I have to solve the problem, grow the business enough that it doesn't remain loss-making, which, by the way, I fully intend to do. But this is the way that I built M7 as well. I obviously started with my team, my partners there, but there were 18 people and absolutely no income at all at M7. That was mad. This time we've got 40 people and enough income to pay for 20. So it's a variation on a theme. But, my belief is it's much easier to convince people to give you money, particularly if you run a fund management business or an asset management business, if you've prepared to invest in the platform yourself. And so we are a full service platform. And so when people talk about the strategies that I'm suggesting, when I talk about the problems, the strategies that I'm suggesting, I actually have the manpower, woman power, the people power to back it up, rather than saying, look, it's me, a computer. I found a dog. He barks a lot. And we're going to do it. And then I'm going to employ some people when you give me some money. So here is my platform. Here is all the infrastructure. Now, I was lucky enough that with starting this, I had a bit of wherewithal to be able to put some money into the platform and hire people. But it could go south really fast if I don't scale it. But again, this comes back to being not afraid to fail. I think scaling it right now is the right thing to do because there is capital that is interested in opportunistic positions. But you've got to demonstrate that you've got the manpower and capability to actually deliver on it. And I think Martley is, for a startup, kind of uniquely positioned to take advantage. Yeah,
and give investors, allocators the confidence to be able to back the various pots and funds that you have, and you've got the team and the infrastructure and rigor around.
Yeah, because I'm not saying that I'm not prepared to back it myself by employing people and creating a platform. Yeah, I mean, I think that gives people confidence. It should give people confidence.
Where do you see capital, kind of global capital, coming from, looking to kind of access the UK
Globally.
and European market? But
you answered your own question. Where is the global capital from? Everywhere.
It's everywhere.
Yeah, potentially. I mean, there is, the UK has some unique challenges. I think my political views are well known. I hate this government. Hate is strong. I don't like the word hate, but, they've been a disaster, And Kemi Badenoch yesterday, God, her attack on the former chairman of the post office under parliamentary privilege is another example of where this government has gone hideously wrong. And I think they damage this country. I mean, I really do. I cannot tell you how toxic this government is, in my opinion, and the Conservative Party generally. So, I will be voting Labour at the next election just to ensure that we get a change of government and the Conservative Party can refresh or break up or, so the UK has, this started because the UK has challenges at the moment, created in part by Brexit, which as you know, I think makes about as much sense as slamming.
I wasn't going to raise it.
Well, I'm going to raise it. Repeatedly slamming car door onto your hand, it doesn't make any sense. It still doesn't. And I find that the Brexiteers who go, well, we've got sovereignty. Well, you can't fucking eat sovereignty, can you? It's a stupid concept, Napoleonic concept. Anyway, put that aside. The issues that the UK have put off some international investors. However, you saw Steve Schwarzman say and John Gray about the UK, they believe in it long term. And by the way, so do I. I think the UK has 3 innate advantages that no other country has in combination anyway. One, we have the best legal system in the world, full stop. A lot of people just believe that Britain is exceptional. I don't. I think it's a fantastic country, but there are lots of fantastic countries. But we do have the best legal system. I'll go to town on that. We also, thanks to John Harrison, and you're going to be, who is John Harrison, have an innate advantage, which is GMT. He was the guy who invented longitude. We are the center of the day, and people underestimate how important that is. And then we speak English, which obviously is, but it is still the international language of business. So English speaking, center of the day, fantastic legal system. That gives the UK a technical advantage. We're doing our best through this government to get rid of it. We won't, because they're just innate. And I think with a change in government and a change in structure, I think this country is set okay over the next 10, 15 years. So you've got a weak pound, which is attractive to investors. I think you've got an investment market that is feeling very damaged at the moment. So I think this is a good time to invest, and you can attract international capital to that. But my sort of rage against the government started because we do have certain investors at the moment going, we think the UK is just too damaged. But that's down to the government. I think that will change under a Labour administration, which I think will be stable, boring. But right now, having a prime minister who isn't a total arse, I think is going to be great.
Do you think it's priced in, Labour government, or a changing government?
Priced in, but how could they be worse? We have literally the worst government ever in British terms. So I think they're priced in. I do think Rachel Reeves as Chancellor and Keir Starmer as Prime Minister will be an improvement. Now, that doesn't mean to say that I think they're tremendous. I think they're an improvement. So, yeah, I don't think there's anything to price in.
Do you think the challenges in terms of global, half of the global economy has got an election this year? Does that throw a spanner in the works in terms of capital deployment into real estate?
Well, I think you can look at this two ways. There are all kinds of terrifying democratic events happening. I can't terrifying and democratic in the same sentence. But, we could have a Trump presidency. We could continue to have a Conservative government. That looks wildly unlikely. So I don't think you can think too much about it. You just have to accept that democracy is flawed. It's the best form of government, as Churchill said, that apart from, he said it's the worst form of government apart from every form of government ever tried. That's the truth to democracy. It has thrown up some strange results over the last 5, 10 years. But this is a phase, I hope. I believe in democracy, and I think that eventually the global citizenship will get it right, I hope.
Talk to me about the parallels between the global financial crisis and the opportunity set now.
So I think the global financial crisis is misnamed. I don't think it was a financial crisis, it was a liquidity crisis. Basically, the liquidity ran out. There was no money. And the reason that we've had quantitative easing in such large amounts since 2009, it was to put money back in the system, it was to put oil back in the system, but it had all been used. There was no oil in the engine. And now we have a global financial crisis this time, but we don't have a liquidity crisis. There's no shortage of liquidity. There is more money than ever, which is why the S&P, the NASDAQ, the DAX, we're going to ignore the FTSE, are at record highs, and Bitcoin is back over $50,000 a Bitcoin. And so we don't have a liquidity problem anymore. So very different. We obviously have high interest rates, and we had naught interest rates last time. But the financial crisis that we have now is going to drive interest rates down. I've talked to you previously about my view on interest rates. So I don't like the expression contrarian investor, but I do have a contrarian view on interest rates, which is they're coming down harder and faster than people realize. I've been saying this for a while, so people would say, well, you've been saying that for a while and you've been wrong. But traditionally, I think I'm right. Interest rates will fall because the people that can't afford them the most are governments. So here's a little thought for you. The US debt ceiling today is at $34 trillion. It's a proper sum of money. So I don't know if you remember the 1982 speech by Ronald Reagan. There's no reason why you would remember the speech, but famous speech which gave birth to Reaganomics, to which, amongst the things he said, was $1 billion here, $1 billion there. Soon enough, you're talking real money. Well, billion, it's trillions now, 34 trillion. But here's a little stat for you to keep you awake at night. In the next 12 months, starting, just now, over $6 trillion of US sovereign debt rolls, so 2, 5, 10-year money, all of which is basically between 0 and 1, and it'll be above 4, probably. So assume that there's a 400 basis point uplift on that 6 trillion. That's $240 billion of extra interest just on the money that rolls now that the American government has to fund. Well, if you think that the American government's total budget, I think it's $12 or $13 billion, that's 2%. The government is already running this massive structural deficit of nearly 7%. So how can it afford high interest rates when the whole 34 trillion is at 4 or 5%? Here's a little stat for you. That's $1.6 trillion of interest. That's 10% or more. That is 12% of US government spend. That's not sustainable. So interest rates will have to come down. Now, investors will say, well, you're so indebted, we need interest rates to be high to buy your paper. So if that's the case, and they can't afford high interest rates, then quantitative easing and money printing is probably going to be the outcome for the next 10 years. I'm not saying that it ends well, okay, but I'm saying it, which will result in asset inflation again, which is why Martley is exciting. And it is the reason that Bitcoins, which, I tend to take the, position that Barclay Hathaway take, that I don't really see the point in decentralized finance, because when it goes wrong, everybody will insist that it's not decentralized. But, the reason that Bitcoin's $50,000 and Ripple coin and Litecoin or Ripple, Litecoin, Ethereum, etc., all of the various, cryptocurrencies are now going through the roof is all of this liquidity is being pushed into alternative assets, but also this understanding that, fiat currencies are becoming debased. And the only way that governments are going to be able to afford themselves is to print their own money again. We're going to see another 10 years of that. Almost nobody agrees with me, by the way. Every economist will tell you that I'm wrong, well, bar one or two. But I just don't see how else we fund the lifestyle that we have. There's no British government that's going to cut investment into the NHS, but we don't have enough tax takes. So it's going, the Bank of England is going to have to, buy the government bonds, which is what quantitative easing is. So I think we're going to have lower interest rates because they're affordable for the government, and I think we're going to have quantitative easing. But the reality is the modern economic system, as described by Adam Smith or Hayek or Keynes or Friedman, doesn't work anymore. It just doesn't, because we've built our entire empire on debt, and debt can only exist if interest rates are very, very, very low. And, the PSBR, the public sector borrowing requirement of every country is just going up. So and by the way, if you keep interest rates really low, 200% of GDP debt like Japan has works. It's fine. It doesn't. If interest rates are 5%, it blows everything up. So, my view is that interest rates are falling. As I say, I am in a view of a few people at the moment. This is not a popular view, and it goes against economics as it's taught in school. And I accept that I might be wrong. I don't think I am.
Well, you heard it here at some stage, the listeners. Talk to me about setting up or backing numerous other businesses across the real estate ecosystem. How and why did you want to do that?
Well, how, I don't know. Just people came to me and said, would you? And I was like, yeah. Why? Because it's fun. And also, take Mirastar. Egad Arena is just a superstar, and I wanted to help her. And when David Hatcher came to talk to me about React News, he's just a good dude. And it wasn't in either case huge sums of money to help them. And, why wouldn't you? If you had the resource and there were people that you liked and you wanted to help them, why wouldn't you? And if you could take an economic position that goes, well, again, super. But it's like, we did it, and I say it wasn't me, it was my M7 partners. We did it together. And by the way, there's lots of things that we got, things that we don't talk about, which are the things that have gone less than well. But those two went very, very well. But they're just good people who deserve backing. And one of the reasons actually that I do it and will continue to do it is that when I was setting up M7, it was really lonely because I didn't have anybody who would help us, or at least not particularly. And so when we had the wherewithal to help, and we could, I kind of think, why wouldn't you? Rather than why.
how did you go about setting up, raising that first fund or getting the first capital to back you?
Oh, God, by begging. Honestly, it was pathetic to watch. Basically charging no fees and begging and just sort of, I'd say to anybody who starts a business, just put runs on the board. Don't matter if you lose money on the first trade, just put money on. You must make money on the investment, but if you lose money on the fees, just get runs on the board. And that's what we did at M7. And I mean, Noel Manns and Mark Donner, who are our first two backers, would, I'm hugely grateful to both of them. But the commercial deals that we struck with both were certainly geared in their favor, knowingly. I mean, my view was just get a couple of deals done, get a reputation for getting deals done and understood, and then, different capital will find you, which is what happened.
For someone listening to this who's sat at a fund or an investment management business who's got aspirations to set up their own real estate platform, asset manager, investment business, what advice would you give them other than just get a couple of runs on the board?
That's the primary advice, and just make sure that whatever it is you're trying to sell or raise money for, you really understand. At least you come across as if you understand it. So don't just say like I think things are cheap, I want to buy them. Data, platform, and believe in what you're doing. And be knowledgeable on it. I mean, people might not agree with all the conclusions that I've come to, but I don't think you'd meet anybody who wouldn't say that that I'm not somewhat knowledgeable about most things. And I spend a lot of time reading, researching, trying to make sure that I can answer any question that an investor would ask within reason.
Yeah, I was going to ask you that outside of real estate, what do you focus on, or where's your kind of release from real estate, or is it very much all consuming?
No, I don't. No, real estate is not all consuming for me. It just happens to be what I do. I read a lot. I mean, I read. And I spend a lot of time debating things with my friends and colleagues, and debate, learn. I mean, you can't stop learning, and the more you debate, the more you discuss things with people, and particularly people you disagree with, the more you learn, I think.
Talk to me about what drives you, like what gives you the energy and the fire to keep doing what you're doing day in, day out.
I don't think that there's nothing. I mean, it's just what I am. I don't think there's anything to wake up in the morning and think, today I'm going to have 3 shredded wheat and that's going to fucking fire me. That's just not a thing. I mean, I'm inquisitive. So I suppose I'm more curious. And I would say this about myself. I'm amused by that. Is that the right word? But as long as you find yourself still amused by things, you're still curious, and I think life is interesting. And so if you're interested, then doing things isn't difficult. It's when you lose interest that I think things become difficult. And, I'm fortunately yet have not lost interest in stuff. I'm more interested than I've ever been, actually.
Are you driven by legacy or kind of what you leave behind?
I was talking to my son about this. My eldest son, Zach, who's 21, and just launched his own business, which is really interesting. I don't know. So my father has an amazing legacy. I talk about him. I'm the 6th of 7 children, and my 3 brothers and 3 sisters were all really close. And so aged between 50 and 70. And yet, so their greatest legacy, I think Dad and Mum's greatest legacy, isn't his body of work, which is obviously famous, is this extraordinary family that he built. So I suppose any person who says they're not interested in legacy is lying, because we all have an ego. I mean, I have an ego. I like to manage it as best I can, but so of course I want a legacy. But I do it because it's what I do. It's it's why I get up. It's a difficult thing to say. I very rarely start something because I have a vision of 10 years' time what it's going to look like. If I was an artist, which, by the way, I am the worst fucking artist in the world, but if I was an artist, I would be much more abstract than I would be defined. Everything that I start because I want to see where it will go. But you go on a journey with a business that you're building with the business, at least I do. There is obviously a sort of a business plan of sorts, but I think when you own a massive business, so if you're a huge existing business like Unilever, then of course you must have a plan and a strategy. I think when you're starting something from scratch, which is what most of my career has been, you grow with it, and then it becomes something like M7, and then you hand it over to somebody like Oxford who are going to look after it the way that it should be, because it's like a child. It's grown up. It needs to move on. And that's how I view entrepreneurialism, is you build things, it grows up, and then you leave it.
You don't try and over-engineer or overcomplicate or over-plan.
I'm not clever enough to. I mean, I just I wish I could, Otherwise, I'd be Elon Musk, and I would be a very different person. I've built a very different business. Engineers can over-engineer stuff, but can sort of create things that are different. I'm just a builder of businesses and platforms, and no, I don't over-engineer it, because the platform happens because of the people that you have in it, and then it evolves. It's a living organism, to me anyway.
Flywheels. You fly in the face of convention in terms of picking one thing and focusing on it and doubling down on it for a very long period of time. You seem like you're able to run at lots of different things and take a massive chunk out of.
But there's always been a core. So M7, the core was industrial. It was a sector that I thought, Martley, the core will be offices, well, at least at the moment, and credit. So I can do lots of things at the same time, but they all have a theme running through them. There's a thread.
So as we sit here recording towards the latter stage of February, MIPIM is on the horizon. Mm-hmm. As someone who's never been before, are you going? And what advice have you give me? And can you recount any stories from some previous events that you've been to?
I've been to many MIPIMs. I am, I think, a 28-year veteran. So I only missed 1 year between 1995, which was my first MIPIM, and now I've missed one MIPIM, which was 2009, where I was banned effectively, not by MIPIM. But
that's a story I want to hear.
But I was on gardening leave from GPT, and they insisted that I didn't go, so I didn't. So we held an alternative MIPIM. 6 of us went to Portugal and got very, very drunk. But it was so I've never been in the UK for MIPIM week since 1995. So this is my 28th or 29th MIPIM. I think maybe I'll retire at 30. That seems like a good number. It's a fantastic event, providing, I think people, though, are in danger of taking it too seriously. So I have a rule of no meetings, or at least very few meetings. I go to every party I get invited to. I will turn up to the opening of a fucking envelope if I'm asked. But the rationale behind that is that's how you meet people. I've made loads of friends. I do have dinners and lunches that are pre-described, but basically I just turn up to events and talk to people. I don't have no meetings, but the people who march up and down the Croisette for a meeting every 45 minutes, I think they're mad. I admire them, but I would much rather go to parties, have a good time, because I don't think I've ever done a deal at MIPIM, but I've done hundreds of deals that have come from relationships that started MIPIM. And whether that be 2:00 in the morning at Bar Roma or the Martinez, or whether that be, a lunch where I've met somebody, I have tremendous tremendous sounds like Trump. But I've built some really wonderful relationships at MIPIM and lifelong friendships. And it's a great place to be. But if you think if you are just having meetings, I think you're missing the point of it. It is a Congress. That's what they call themselves, actually. And so where everybody needs to get together and you can meet people. And if you're meeting people that you already know, why? I do hang out with lots of people that I know because they're my friends, but I've met a lot of people at MIPIM by going to parties and just wandering up and saying hello. And, you never know where a conversation might lead. Amazing. Well, thanks for that. I'll take that advice to heart. So there is another biz tip. So there's a bar called Barracuda opposite the Martinez. That's basically where everybody ends up after 3:00 in the morning. Avoid that place. Some of my less good experiences have resulted in, it's kind of like a time warp. It's like you go and then you leave and 3 or 4 hours disappears. And when you leave, life is remarkably more complex than when you went in. Walking is definitely more complex. So just avoid the Barracuda. So as we draw to a close, Richard, a question I ask everyone who comes to the podcast is, if I gave you £500 million worth of capital, who are the people, which property and which place would you deploy that capital? Who are the people? So you give me the money and I'm giving it to somebody else. That doesn't make a lot of sense. You should give it directly to.
No, if you were to hire them or bring them on the journey, or people that you've worked with previously.
So the people that I'm trying to hire at the moment, I obviously can't tell you who they are I hope somebody is giving me 500 million, and I will be doing this. The people I can't tell you about. I mean, so obviously, I name check my partners at M7 and, David Eberl, Jack Toms, Andrew Jenkins, Theresa Dyer, Hugh Fraser, Tom Pearman, Ollie Farrago, David Simmons. I hope I haven't missed anybody out. They are epic. And, if I had my time again, and I'd love to work with them all again one day. Well, we do. We actually have some private businesses together. Sector. For me, co-working is the thing that really stands out as being a real opportunity. What was the other thing that I need to invest in?
And the place. So co-working offices.
The world. UK, Europe, and US primarily. But that sector, I think, is a global opportunity right now. Can I just pick a town that I could randomly put some money in? I love Bury St Edmunds, my hometown. So I feel that would need some investment. And for those people who've never visited Bury St Edmunds, it's epic. Go and visit it. We have an abbey. It's where we buried St Edmund because he died. It's where the Pickwick Papers were written by Charles Dickens. And Abbeygate Street is one of the prettiest streets in the world. It's just a fabulous place. So I double up as a salesman for the Bury St Edmunds Tourist Board, and I would very much like everybody to visit Bury St Edmunds. And that's going to get some money.
And at the end of this, when it's all said and done, and you exited Martley Capital, be a pub landlord there?
Yeah. Pub is probably... I have had a long-term ambition to run a bar in the Caribbean. Not all year, but just like a proper beach bar. And so, I do actually have a business plan for this, which I'm going to share with you. The bar is going to be free. Okay, I don't want to charge anybody for drinks. Drinks are free in this bar. So already people are listening in and thinking that's not very bright. However, to qualify for free drinks, because you'll have to pay, unless you qualify for free drinks, everybody can qualify for a free drink by writing a letter. So there will be computers knocking around the place, and you just have to write a letter to anybody at all. You can write Adolf Hitler because you want to ask him, what the fuck were you thinking? Or you could write to your mum, or you can write to your lover, or whoever you want to. And so I will have a website in which I will every week publish the best letters that are written, subscription website, because most people have something in them to write. And every quarter we'll publish a book with the best letters. And that's driven by Ernest Hemingway wrote an awful lot of letters whilst he was drunk in the Caribbean, some of which were fabulous. And so I'd call the bar the correspondent and make it a place for people to come visit. It will just be a shack. We won't really serve anything that isn't a rum sour or something associated with coconuts. But the aim would be to get people to imbibe a little and write and let their inner feelings out. And I think that would be, honestly, it would be a great insight into humanity. So one day I might actually do that.
And would that be a nod to your father as well?
Oh, of sorts. Not really. This actually is a nod to Ernest Hemingway. It's no more complicated. He was a great letter writer as well as being a writer of books. And he wrote a lot of those letters drunk in the Caribbean.
Well, Richard, you've had a phenomenal career. Like I said, you're a serial entrepreneur, an absolute titan of the real estate industry.
So when I go home tonight, well, when I speak to my son tonight, I can say that I've been described as both a legend and a titan, because that's literally a first for me. So I'm very grateful for that.
Not at all. And certainly don't choose those words lightly.
I'm going to, when I speak to him tonight, I'm going to laugh like hell. And he thinks I'm an arse. So he will bring me back to earth. Back
to reality. Yeah. Well, I'm really, really excited to see what you and your band go on to do.
My new band.
Capital, your new band, and how you go and pursue those different strategies and build the platform. So I'll be watching from the sidelines, cheering you on, and excited to see how you navigate the challenges at the highs and the lows on the way.
Thank you.
Thanks for listening to this week's episode of the People, Property, Place podcast. If you found it insightful, feel free to share it with a friend or colleague. Give us a rating, like, or comment. It helps tremendously. It'd be great to hear from you on LinkedIn. I'm super open-minded to recommendations of guests that we should have on the show or areas of the market we should explore further. So do drop me a message. The People, Property, Place podcast is powered by Rockborn. The team recruit leadership and future leadership hires for real estate owners, funds, investors, and developers. So if you're looking to hire top talent for your business, head over to the website www.rockborn.com, where you'll be able to find a wealth of information, or feel free to drop me a message on LinkedIn. Have a great day wherever you are, and I look forward to catching you next time.